Hello friends, this video is on CFA level 1. We are going to study on the topic called fixed income securities. So let us start a chapter. So here the most common type of fixed income security is bond. Okay, so bond. So here the most common type of fixed income security is what? Bond. So please write down most common type of income security is what? Is bond. Now, what do you understand by the bond? This is the thing. So bond means, bond is a thing which promises to make a series of interest payment in fixed amount, and also it promises to repay the principal amount at maturity. So bond is an instrument, you could say bond is an instrument where it promises to make the series of payment in fixed amount and also to repay the principal amount at the time of maturity. So bond promises, so just write down, promises to make a series of interest payments in fixed amount in fixed amounts and to repay the principal amount. At maturity. Okay, or at a time of maturity you could write it, or write it maturity only, fine. At maturity. Okay. Now when market rate, that is when market interest rate increases, that is yield on bond increases, the value of such bond decreases because the present value of the bond's promised cash flow decreases when there is discount rate is used. That is okay. So whenever the market interest rate increases or bond yield increases, value of such bond decreases. This is happens why? Because of the present value of the bond promised cash flow decreases whenever there is a higher discount rate is used. So please write on this point as well. When market prices, when market interest rate that is yield on bonds, that is both are the same things, rises or increases, the value of bond decreases, also called inversely proportional. Inversely proportional, which means whenever the price of interest rate, market interest rate of bond or yield rises, then there will the bond decreases, then the value of bond will decrease. That is known as inversely proportional. And this happens why? Because the present value of a bonds promised cash flow decreases when a higher discount rate is applied. When a higher discount rate is applied. So the reason is also given why it happens, because of higher discount rate. Now bonds are rated based on their relative probability of default, that is failure to make promised payments. Okay, so please write down this thing also. Bonds are rated, so the bonds are basically rated on their relative probability of default. Default means non-payment. That is non-payment. Relative probability. Okay. Now, because investors prefer bonds with lower probability of default, bonds with lower credit quality must offer investors high yield to compensate for the greater probability of default. So wherever the bonds with having low credit quality, it will have higher return as well as higher risk. Okay, so please write down this thing. Bonds having lower credit or lower rating, lower credit rating or quality gives investors, oh no, don't write this thing, with those bonds which have lower credit rating or quality, which means higher risk as well as high chance of as well as higher yields. Okay, so bonds which have lower credit rating or quality, definitely it means higher risk is there as well as higher yields is also there. Both the things are there. So a decrease in bonds rating increased probability of default will decrease the price of the bond, thus increasing the yield. Okay, so these are things. Bonds having lower credit quality, simple means it is having the higher risk as well as higher return also. Higher yield, not higher return, you could say. Higher return. Okay. Now, features of a fixed income security. Please write down. Features of a fixed income security. So what are the features of the fixed income security? So first thing is that there are certain points which are to be noted down. So basically first one is, what are the features of fixed income security? So that is the fixed. Fixed means you are going to get certain kind of money every time. So first one is, the issuer of the bond. So the features of fixed income security, which includes a specification, So first one is the issuer of the bond, maturity date of the bond. Second point is maturity date of bond. Then these are the certain things which are to be taken care. Then the par value or the principal value to be repaid. Okay. Fourth one is coupon rate and frequency. Then the currency in which payments will be made. So basically the features of fixed income security, which includes a specification like, what are the specifications? First one, it says the issuer of the bond, who is going to issue the bond, then maturity date of the bond, then par value or the principal value to be repaid, then the coupon rate and frequency, and the last one is currency in which payments will be made. Please write down all those things in your copy, in your notebook, and we have studied this thing as part 1. Please make it part 1. We will study further in the next hour session. Thank you.